Hello and Happy New Year, and welcome back to the first Explain It to Hope of 2022.
Happy New Year.
Today on Explain It to Hope, we're talking about second homes. And I have a friend who's a younger couple, doing well, wanting to buy a rental property in Hilton Head. Where do they start?
Are they from here or from someplace else?
From Charlotte, from a few hours away, to generalize it.
So, not just an investment property, but a vacation rental, something.
Right.
Right, okay.
They're going to use it, but they want it to make money too.
Sure,
in some form.
yeah. Well, like so much of our market right now, we have a real shortage of inventory. And the first place a person would want to start would be, how much can they afford, right? So that goes back to that old question of how much money do you have to put down? How much of a mortgage payment can you afford? And how much rental income are you anticipating to offset expenses? Yeah.
So with a regular home or a primary home, I feel like there's kind of a standard formula of you're gonna put X% down, whatever. With vacation homes and second homes, does it typically follow that same formula, or do people tend to put more down or less down?
People do tend to put more down. There are some lenders around that will do a 90% LTV on a second home, vacation home. But typically you need to expect 80%. Again, the market is very, very competitive. And remember a few weeks ago we talked about appraisal waivers and why we're doing that. If you want to go back, maybe Hope can put a link in the bottom and you can talk about appraisal waivers, but it's very competitive. And so when you write an offer on a vacation rental property, typically there's more than one person making an offer on the property, so you have to bring your strongest offer possible. But I would say that most people are putting down at least 20%, although there are a lot of people paying cash.
So how is the loan process different for a second home versus a primary residence?
Well, that's a good question. Not terribly different. Usually interest rates on second homes are a little bit higher than they are on primary residences. If you're buying it strictly as an investment property, then the interest rate will be higher still. Now the difference is a second home is a property that you can afford without any rental income, right? A vacation rental property is a property where you need to have the income to qualify for the purchase of the property. So yes, it's the same process: loan application, credit standards, bank statements, employment records, and what have you. But also there will be a bump in the interest rates depending on how you're financing the property.
So is there a difference? Are you going to be able to, Mike Broadhurst, help them whether or not they want it to be just vacation or with rental because of the different process? Yeah,
I've been, as you know, I've been here 30 years, and before selling real estate for the last 20, I was lending money. I was a mortgage lender here for 10 years and 10 years before in Washington, D.C. So yes, I can help people navigate those waters. How is it best to go to a lender, whether it will be a second home or whether it will be a vacation rental property, and how to present that to a lender, for sure.
Well, that's awesome. That's the perfect answer. So if you need any of that help, or if you have any other questions, you can call Mike at 843-837-7773. And again, we're super excited to be back for the new year.
Yeah, looking forward to a great new year.
Thank you so much.
Thanks.